Welcome to Amanda Spann's Minimal Viable Podcast, the show that gives you a real and relatable look at the world of tech and entrepreneurship from industry all-stars. On this episode of MVP, we'll be chatting with marketing promotions veteran Lex Pierre Lewis, boasting nearly 20 years in the entertainment industry and a roster of clients that include the likes of DJ Khaled, Rick Ross, Def Jam, Pepsi, Uber, Burger King, Western Union, and more. Lex will share the secrets behind its sustainable longevity and the misconceptions surrounding work-life balance. MVP is brought to you by Simplero, the all-in-one software for online entrepreneurs. Most digital coaches, consultants, and entrepreneurs are using 7+ online tools that still don't meet their needs. Simplero reduces the headache of product management by allowing you to host your mailing list, online courses, membership communities, marketing automation, and digital products all on one platform. It's my personal go-to tool of choice for selling my ebooks and courses, and I think it's pretty affordable, simple to use, and easy to get started. So if you like to experience less tech and less stress when selling your content or products online, check out Simplero at simplero.com. That's SIMPLERO.com. Now let's start the show. Hello, Lex. Welcome to MVP. Happy to have you. Happy to get on your very, very busy schedule. I know you're always ripping and running, so this is quite an honor to have you on the show.
Well, first of all, thank you for having me on the show. It is my pleasure to be a guest on the show, and I'm having a great day in sunny South Florida.
Always a beautiful day in sunny South Florida. So today I want to talk about a lot of different things with you. I mean, me and you have been knowing each other for quite some time now. I feel like it dates back to like I don't know if you still represent Atlantic, but like when I was like working with the Atlantic Street team, I remember them telling me like, yo, if you're going to do this Atlantic, this music stuff, you got to meet this guy Lex. Like, he's running everything down in Miami. You should model everything you're doing after him. And so that was kind of my first introduction to you, but you've done a lot of things since then. So I kind of want to just kind of go through the history of everything you've done, you know, building your company over the past essentially decade plus. And then, like, what's next for you and, like, what people can learn about, like, longevity, you know, staying in the game, maintaining great client relationships from somebody like you who's really showed a lot of fortitude as far as maintaining really, really great relationships in your industry and beyond. So, you know, I want to start with, like, if you can kind of give, like, our listeners kind of a background on how you got started in the promotions game, and, like, why you decided to launch your company, and, like, how did you secure your first contract?
Well, God is good. This is year number 15. We've been in business now for 15 years. Started a promotions and marketing company in 2004. It was by default. That wasn't really the plan. I was actually the quote-unquote popular guy back in high school and colleges, and I would DJ and throw my own events. And from college and the high school days, just promoting my own events, it turned into me running a full-service marketing and promotions company. It really went from us throwing our own events to quickly, actually, you asked about one of my first clients. One of my first clients, very first clients, was the person responsible for parental advisory stickers on albums, or on all albums, all genres, which is Uncle Luke Luther Campbell. So he was one of my first clients, and what really happened is at the time, me and my team had a pulse on the college and high school demographic. And as you know, musicians of all genres and record labels and even smaller local record labels in each market, one of the best ways to get your music out there is to get the kids and the college folks to listen to your music. So what better way than to kind of recruit the people in whatever city that is that are throwing the high school parties, throwing the high school or the college events, and that was me. So Uncle Luke was actually one of my first clients back in the days of Luke Records. He had a couple of artists that he was promoting and pushing. One of them was an international music artist that we now call Pitbull. So that was one of my first clients.
I think that Pitbull has had like one of the greatest rebrands like of all time. Like him and like Teach, what they did with that, how they turned not even turn that around, how they just kind of pivoted and went a different direction was wild. I mean, it's been amazing to watch. Like every time I think about it, every time I see Pitbull on television in his suits, his fine tailored French cut suits, I'm just like, it's just it blows my mind, like how big of a great marketing and rebranding play that was, and like his longevity in this game, and how you can really kind of, you know, position yourselves in new ways to new audiences.
I mean,
I remember when he was off wearing jeans with everything.
Yeah, I mean, that's definitely Pitt, and Big Teach, who was also one of my clients and one of my mentors, had a lot to do with that. And that's, you know, definitely rebranding goes to one of the talking points that you spoke about, longevity in the game. And if you look at another one of my clients and friends, DJ Khaled, over the past 4 or 5 years, he's definitely shifted his career path, taking a social media plan and platform and turning himself not only into a DJ, which he's always been one of the most excellent DJs from back in the days when he was doing the Caribbean music to now, but also looking at him not only as a producer, but branding himself as a music mogul, hands down a music mogul. And that's one of the things that you have to have in any industry you're in, whether it's entertainment, whether it's real estate, whether it's business, whether it's local government, whether even if you're a teacher. At the end of the day, in order to stay relevant in an industry, a couple of things you have to do. Number one is be the best at whatever it is. Number two is deliver. Number three is over-deliver. And number four, there's definitely going to be a point in time when you have to rebrand, and you cannot be afraid of that, of when that time approaches.
So was it always, I think it sounds like it was organically entertainment for you because you were just kind of throwing parties and things to make money, but like even in the early days, were you ever thinking about anything outside of entertainment or like?
Definitely. As soon as I started my career, entertainment was the easy layup because I was in it. But, you know, we quickly had clients such as Western Union because I'm from the Caribbean. So I quickly realized that one of the advantages that our company has, and I come from South Florida. I work in the South Florida market. Most of my branding originally started in the Florida market, is that we can cater to the Caribbean demographic, the multicultural demographic, so taking advantage of that. So companies like Western Union, of course, wanted to reach the Caribbean, Bahamas, Haiti, Jamaica, and those money transferring agencies. But outside of the music industry, our niche spread across to realizing, all right, the music industry is almost a layup. I'm not going to say it was easy to acquire those clients because they're very demanding. But once you acquire 1, 2, or 3 of those clients and you deliver and you're consistent, then you can pretty much go and acquire more, or word of mouth will spread and you'll be able to acquire more. But we also realized that the niche that we had as we got older is, yes, we have the Caribbean niche, but we also have the millennials, that 18, maybe even younger than millennials, that 18 to 30 demographic, and all types of different companies I want to reach that demographic, whether it be a liquor company, an energy drink, a fast food restaurant, a technology industry. We were able to deliver that message. So we spread our client portfolio to entertaining all of those different type of companies.
It makes sense. So what do you think has been the most difficult part about working in that space? Like, is it the long hours? Is it just kind of the fickle nature of the business? Is it dealing with folks in the entertainment industry and, like, how that can be, you know, some people can be very professional in the industry, some people can be very unprofessional. Like, there are a different set of rules for that. So, like, what do you think has been, like, the part that not necessarily you're most surprised by, but you find, like, to this day still frustrates you a little bit?
So I'll touch on 2 different points. On the music and entertainment part of my clientele, everything is last minute. No matter what they say, no matter what they want, everything is last minute, and they're expecting you to make miracles happen within a budget. I think that is the standard in the entertainment industry. You know, everything happens last minute, and they want it done to the highest standard, and the budget may not be as large or great as you would like it to be. Now, with my corporate clients, sometimes the issue is making, let's say I have a client who is a corporate person who stays in the office and who wants to reach that 18 to 34 urban demographic. They want to reach that 18 to 34 demographic, whether it's someone in college or whether it's a young professional, 27, who just graduated and now has their first career, their first real job, making $80,000 a year and has the buying power and the buying potential. But that person in the corporate office or that client in the corporate office who's above 60 doesn't understand the language and the tactics that it takes to dictate what that millennial or that 27-year-old who just graduated college with his real career, his or her real career and the buying power, who doesn't understand how to direct or deliver a message to them. And when we're telling them the strategies and their approach, they're not seeing it. And a lot of time it's proven show. So we have to literally guinea pig a project or take a past project and say, this is a tactic that we use to deliver the client's message to this audience, and it worked. Now, you need to trust us to deliver your message to that 18 to 34 demographic that you don't understand, which is why you hired us, and just trust us and let us do what we do. So sometimes that is the challenging part on the corporate side.
So that sounds really frustrating. Do you find that you ever kind of bump heads with a client like that so much that you might have to like fire them, or have you fired a client before?
Business rule 101. Never be afraid to fire a client. Business rule 102. Never be afraid to fire the people that work for you. I've learned that in the course of operating a business, one of my biggest weaknesses is realizing or not properly analyzing some of my staff and not letting them go fast enough. Because sometimes, as a business owner, you have a vision for your company, you have goals that you're trying to reach, you have benchmarks and deadlines, and you genuinely want to help others, and you genuinely want to give them opportunities and want to try them out. But I feel like sometimes other people are not moving at a faster rate. And there is a cost to keeping on dead weight, whether it's a client that doesn't understand what it takes to win or whether it's an individual. And sometimes you also have to train them and literally train and work with an individual that's working for you, or train and work with a client and make them understand. That might take 3 months, 6 months, or a year.
So at what point do you let that person go? So it sounds like you kind of subscribe to the principle, and I've heard this a lot, especially from other entrepreneurs. It's like hire slow, fire fast, right? But like, at what point do you know, this person's got to go?
I mean, there's definitely, for every business, depending on the nature of the business, there's different benchmarks. With me, it's a financial benchmark. Now my staff and my team that are working with us have financial benchmarks that they have to meet monthly. And if they're not able to meet those financial benchmarks within 3 months, then after that, it's a repositioning them within the company or terminating them, whichever is best for them and for the company. With clients, as far as having a client, and every project, every client is different. I have a client that I've been working for 3 years, and they're just now understanding the importance of increasing the monthly retainer. And I've been telling them for years, they're happy with the money they were spending and the results. And I really told them, all right, if you're spending X amount of dollars and you're getting X amount of results, if you double what you're spending with us, you double the monthly retainer, the deliverables that we're going to deliver is not going to double, it's going to triple. And I've been telling them this for years, and they just weren't really trying to move. And now that they've doubled our monthly retainer, the deliverables that we're measuring and the results that we're providing to the client have clearly tripled. So they're getting beyond the quote-unquote bang for the buck. But that was a 2.5, 3-year training process to get them to increase the spending.
So do you feel like, do you struggle with that with I don't want to say struggle, but do you find more times than not clients lean towards being like that? Like, I'm apprehensive about spending more. I don't know if that's an entertainment-focused client or a corporate client, and like there are, budget constraints with that. But do you find that most of your clients are like that? Like, I'm a little apprehensive about spending more, or do you find that the vast majority of them are like, oh, okay, well, I'm spending X amount right now, and I think that it will, if I gradually increase this, then I'll see more results. Like, do you feel like you kind of have to go back and forth with a lot more clients than not?
As an entrepreneur, I noticed that all clients normally have to budget. It's like for every person listening to this podcast, they know how much they could afford for a rental car per week, or leasing a car, or purchasing a car. Now, what makes them decide to double or increase that, it has to be the reward. So once client really understand the reward, then they're normally willing to increase that budget. For example, if you're going to purchase a Toyota, you know what you're getting in a Toyota. But if you really understand all the dynamics, all the feature, all the safety feature involved with a Mercedes, you might be willing to increase your budget to Mercedes, as long as you could afford it once you know all of the added value. But if you're not clear on understanding all the added value, I'll stick to my Toyota.
So there's like an educational learning curve, right? So it sounds
Definitely.
like you kind of have to continue to work with the clients in order to provide them with like content collateral, case studies, and like essentially social proof that this is going to continue to add value to them. And the more they're educated, the more they know, okay, well, if I invest more in myself, then I'll make more.
Correct. And then you also have clients that, once more, for all business across platform and all entrepreneurs, certain clients are seasonal. They go into, for example, back to school is fast approaching. You have back to school, you have New Year's Eve, you have Thanksgiving, you have certain holidays, and in certain companies, as the summer wraps up, the summertime is actually peak for them. Versus some companies, the summertime is low. We're going to go into spring break soon in March. For some companies, that is peak time. So those companies, no matter what business you're in, you need to understand your client and know what times of the year or what season when the budget can easily increase, and plan months ahead for that client to know, hey, come spring break, your sales are going to go up, and we're going to put this campaign together, and you'll be able to afford it. And I think that's from being in business for years and understanding the workflow of your company, the workflow of your client, and the sell pattern of your client. That's when you're able to get those spikes throughout the year.
Okay. Now, I've actually had the fortune of coming to your office and everything, and I know that you are the type of person that works both in your business and on your business at the same time. And what I mean by that is that you are very hands-on in what's happening in your business from day to day, working with your employees while you're simultaneously planning for the future. Like, what can you say? I mean, everyone wants to scale, right? Everyone wants to grow a business where they don't have to be in it all the time. But what can you say or speak to regarding the value of being in your business first? Because I think a lot of people, especially in this day and age, kind of want to get to that point where they're like, oh, I'm the boss, and they kind of romanticize the idea of running this business that kind of moves without them, which is fine. And I think, even I kind of want to run a business that runs on its own. But I think there's a lot of power and there's a lot of value in being kind of in the weeds with your employees and with your, whether that's co-founders or, in the weeds with your clients. So can you touch a little bit on that and why that's important to you as an entrepreneur?
Once more, I think that depends on the nature of your business. I have some businesses outside of my God is Good successful marketing and promotions company that I'm, owner absentee. And owner absentee is a business where the CEO really is not involved in the day-to-day activities, more maybe weekly, bi-weekly, or monthly, gets a report or goes in and signs checks and keeps it moving. So I have several businesses that I'm an owner absentee that don't need to be involved. But for the business that I'm in day to day, which is my marketing and promotions and branding company, it does heavily revolve around me because it's a relationship-based business. A lot of the clients that I work with are musicians and big liquor companies and clothing lines, and are involved with influencers. So it's hard for a John Doe to deal with a Rick Ross when Rick Ross is a multimillionaire, never heard of him. It's hard for me to hire someone who DJ Khaled doesn't know, and who a rapper like Yo Gotti, or even a politician who's not too familiar, whether it's a city mayor or a governor, to, hey, I'm going to connect you with this person, and they're going to take the lead. Who's this person? I don't know him. I've known you for 15 years. I've done business with you for 10 years. I've been seeing you at events for 5 years. So depending on the nature of your business, you have to understand that some businesses you're going to have to be underground, face-to-face, day-to-day with your client. Some businesses within 2-3 years you can be owner absentee. So I think all of that depends on the nature of your business and what type of company you have. One of my colleagues has a tax company, and he was able to scale it up to having 13 offices because the way the business structure and the business model was, it wasn't about him as the accountant. It was about such and such tax company, and they do quality, great service. So now as I'm hiring new people, I do the intro with new clients from day one, and my new clients do not ever need to see me or talk to me because of the company name and the reputation. They can deal with any sales rep or any project manager. Some of my long-term clients, it's a little different. They're used to dealing with me, so trying to initiate a new project manager is a little bit challenging, which is why as we grow the company, we're going after different clients and new clients.
That makes sense. Now, I know there's a lot of people who, I won't say they envy, but they very much look up to you and look at you as a kind of a role model who's in the space and who's in the industry and someone who's really created a legacy of longevity for themselves. So what is one thing that you wish, like all of your, like I'll call them mentees for the purpose of the conversation, knew about you and about running a business like yours?
So before I won numerous awards, 40 under 40, I think I've received that award maybe 3 or 4 different times from different organizations. 30 under 30, I've definitely received that award maybe 4 or 5 times from different organizations. Black Enterprise, Miami New Times, BE Modern Man. Before all these awards, people did not understand or were not seeing it. Before seeing me on a private jet with a celebrity, before seeing me receiving awards and celebrity endorsement, and before all of these things, and before gaining national recognition on a national level for branding and marketing and different projects, what people have to realize is before all of those things, it was years of me by myself with 1 or 2 people that supported me, that supported my dream, putting in nights and countless sleeps. It was me skipping out on July 4th vacations with the family, me skipping out on spring break turnips in Cancun. It was years of me skipping Black College spring break to enjoy it, but rather working the event. So it's years of hard work and making sacrifices financially, sacrificing time with family, sacrificing time with friends and college friends, sacrificing all of those times in order to reach the goal. And I think that's what a lot of people don't see. They see the end goal. Oh, wow, he's doing this. He's in this publication. He's in this blog site. He's on this TV show. His staff is doing these great projects. But when we're there, these people aren't seen when, the end of the month and you got to pay these crazy bills and you're trying to manage and balance the books. And they're not seeing when you're first, maybe year 4 or 5 into your business and you're not understanding the proper accounting and how to properly deal with IRS and how they could literally come knock on your door and serve you papers. And I think even now, I tell every business individual, your 2 best friends are supposed to be your accountant and your lawyer. Do not wait for a lawyer. Do not wait to have a lawyer when you need one. That needs to be a part of your monthly payroll. My accountant is literally one of my best friends now. We talk every 3 days at the bare minimum, and that comes from understanding business. And then I think another thing is, as I'm in year 15, it's like how to scale the business and making the right moves to scale your business and to grow your business in order to be around for another 15 years.
What do you think the secret to scaling is?
I wish I knew. I don't think there's a real secret. If I knew, the company would be worth a couple more million. I'll tell you that. I honestly don't think there's a real secret to scaling your business. I do think that you look now. So I come from I'm in my mid-30s, but I come from day-to-day, my business mentors and my business colleagues are in their late 40s, so they're like 10, 15 years older than me. And I watched how they were really self-funded. All their companies were self-funded. Literally, grab $1, $2, they're funded their own company. Maybe borrowed from a sister, from a brother, a best friend, put the money together, or really, really self-funded. And then I look at the next generation, which I'll say between 18 and 25, the current generation of future businessmen and entrepreneurs, or even, let's go even younger, 16 to 22. That generation is literally looking for angel investors. They're looking for crowdfunding. They're looking for donors and investors, and they're thinking about how to start a company is totally different from my colleagues that are 10, 15 years older than me. So I think that I am appreciative that now there is new ways for minorities to gain funding to start their company. But I also understand that when you really start a company with your own $1, $2, $3, $4, $5, $600 or $1,000, you might view it differently. And I say this because I know a colleague whose company was solely funded on investors, and for 2 years it was running off investors, and it ain't working. He's like, it wasn't my money. Let me go try something else. Versus if you literally take a loan on your mom's house to start a company, and you know if this company doesn't work, mommy's homeless and I'm homeless, you're going to do whatever it takes to make it work.
Right. Do you think that having those, these new forms of funding and things like that are a crux for growing their business? And like, I kind of almost feel like the internet has just made it look so easy and so accessible to do, because even crowdfunding isn't easy. Like, very, very few people actually, and in fundraising too, like if you're looking for an angel or you're looking for a VC or whatever, like, it's not easy to raise around. There's a reason why there's only been like 34 black women in the history of, tech companies or whatnot, startups who've raised over $1 million. Because it's not an easy feat for anybody, let alone black entrepreneurs. So do you feel like these funding opportunities are kind of a blessing and a curse, or that, they're great because they provide us with new opportunities to get the money that we need to fuel our ideas, or do you feel like they're more of a crux for people who don't want to bet on themselves?
I think every individual is different. Till this day, self-funded. My company is 100% self-funded, and I'm proud to say we're 100% self-funded, no investors of any type. But on the same token, that's this company, Lex Promotions and Marketing Group, full-service marketing and promotions company, self-funded. I have 2, 3 other business ventures, which I do have investors, which I do have partners. So I think it's really depending on the individual, their end goal, and how they want their legacy to be. With me, it's more about a legacy. It's more about 15, when I'm 50, 60, 70 years old, what's my legacy? Versus some people, it's just about making a quick buck. It's not about a legacy. I think it's really the nature of the individual. I think if I was between 18 and 24 years old, coming up, starting a company, I would be going after investors left and right, because I feel like that's the in thing. That is the trend. At my time, me starting my company in 2004, it was about self-made. We're all self-made. We're all bosses. We're going to do our own thing. Me now, if the right company comes and approaches me for a buyout, if the right individual comes and wants to partner and help me scale the company, as long as it's the right partner and our visions align, come on in. Let's make it work.
Yeah, I kind of feel similar. Like, I got a couple of different business ventures, and I feel differently about each one, right? Like, there's some things that I bootstrap all of my businesses, but, there are some businesses like I would sell tomorrow. You offer me, the right person offers me the right check, you can have it. Say less, right? But there are other businesses that I'm a little bit more passionate about, or they're a little bit more intimate to me. And so it's just like, I kind of built this thing from the ground up, and like I would feel robbed. Not even robbed is the right term, but like it's just, this isn't an appropriate business to sell, or I wouldn't want someone to have ownership over the direction in which this might go. right? But other things that can come and go, and I think there are other things that it will be much more difficult to scale. And like I'm considering taking on funding for a couple of my apps, and I feel like the company can go to the next level with the support of an angel or a VC. Like I've done everything I can do from this point, but I also think, to my credit, VCs look at me like, when I approach them now about getting that funding or raising that round, they say, you know what, like I am willing to invest in Amanda because Amanda was first willing to invest in herself. She has so much confidence in herself and her product and what she's able to do that I can now put money on her because I know this girl is willing to put her money up first, and that's somebody who that's the type of character that I want to invest in. And I think that's something that's missing that I see from a lot of not necessarily even young people. I think it's just like a personality type almost. Because I see it from people who are in their 30s and 40s too, where like they might have the money, they might not have the money, but they'll come and be like, oh, I got this dope idea, but I don't want to put my money up for it. I just have an idea and I think an investor should give me the money to get it started. Like, well, how should that person know that they should bet on you? You don't have a product. You don't have any traction. You're not making any money yet. And, like, if you're working a regular job, I don't know that you can sell outside of the parameters that a company has set for you. So how or why should I take a bet on you and put up my money on someone who's not willing to put up money for themselves, right? And that's something I kind of, like, grapple with people like say, even like if you're doing the most basic version of a product or a basic version of a service, like that's at least something to show. But like, why do you think that other people should put up money for you just on the strength that you're you and you have an idea? Like ideas are worthless if they're not put in practice. And that kind of frustrates me when I hear all of that, or even I've even had people criticize me because they're like, oh, that's dumb. You put up your own money for your own product. Like, why the hell wouldn't I put up my own money for my own product? I can believe it's going to work. Like, who better to bet on me than me?
I definitely think it's also a mental maturity and it's just also different types of company. Every company is different. I look at a colleague of mine who started a company, and from day one, the plan is to sell this thing. They literally blew it up like a bottle, or blew it up like a balloon, to make it look shiny and pretty and sell it and be gone. And another master of doing this is 50 Cent. 50 Cent is the master of blowing up a company, make it look great, getting out of it. Done. Cash out. So I think it depends on the individual and what your plans are and what type of company it is. I look at my family is heavily involved in Haiti construction, and we have a construction company, and we never had to plan on selling the company, and we weren't really looking for investors. But after the earthquake in Haiti, investors started coming banging on our door because we already had a head start in the construction industry, and it just was the natural fix to they want to invest and they want to help scale our construction company. Come on board. But that wasn't the original plan. So no matter what you do in business, your original plan might change, but regardless, you got to have a blueprint.
Yeah, for sure. And what I do think is great about like the era that we're in right now is there's so many different types of exit strategies now. So you could be thinking about all of the different possibilities before you even start a business. Like people think, it's not even just should I take capital or whatnot. Like you could be acquired, but it could also be an acqui-hire, right? So the person could not only acquire your business but pay you millions of dollars to buy the business itself, but then they can continue to pay you a salary to work and operate the business on a day-to-day basis, right? And I've actually seen this happen for a number of my friends where they continue to work in the business, and it's like you're still continuing to run your business. You get a salary benefit, but you also got a couple million sitting in the bank now. And, like, for some people, that's the life, right? There are people who just outright buy your business and you're not hands-on with it anymore. There are people who, sell portions of their company and, like, now legs of it are run by other entities and they're only focused on one or two business verticals. So I think there's a lot of different options that people have to explore. I think, I'm frustrated by people who have this just very narrow view of, like, what a business could look like, how to start it up, and then, like, how it can exit. Like there's only one or two things. Like, the sky's really the limit, and I just wish more people were willing to kind of bet on themselves in that way to get started, or just take the risk of taking the risk to get to the next level. So, but, so I guess there's enough about that. But I think, I know you are in a process of, like, kind of you're always leveling up on yourself. But what do you believe is kind of at the root of leveling up? Like, and you could define leveling up however you want. Maybe that's monetary. Maybe that is, a better relationship with friends and family or whatever.
I mean, I can only speak for myself. Leveling up to every individual is going to be different. I want to hear Lex's definition and what Lex is leveling up to that. Lex Pierre Lewis' definition of leveling up, of course, these the following are the basics: having a great relationship with God, having a great relationship with your family, friends, and of course, if you're a parent, putting parenting definitely as the first thing in your life. Now, outside of the basics, which should be undeniable across the board, mortgage-free, car paid off, mortgage-free, having the financial stability, but in addition to making sure you're putting on others, being able to create a business if you're a business owner, where you're able to put on others. And what I mean by putting on others, I've had several people that have worked for me and may only work for me for a year or two, but because of them coming through the office doors, they're able to go out and get different jobs. They're able to start their own company. They're able to use the LP&G boot camp as a stepping stone to start their own thing or to go into a business venture that they want to go into. And enough, of course, giving back to the community. And giving back to the community could be as far as officially mentoring or literally just giving business advice to colleagues. Some people have official mentorship programs where they mentor, whether it's high school students or even adults that are business savvy or trying to get into the business industry on a biweekly or monthly, but whatever it is, whatever your definition of quote-unquote giving back to the block might be. So I think family, God, financial stability, and then finding a way that aligns with your belief in giving back.
All right, that's fair. Well, I don't have too many more questions for you, but we do a listener submitted question every episode. So, I put out kind of the back call and let people know that, Lex is going to be on the show or whatnot. And so I got a question in, and I'm going to read it to you, and you can feel free to respond any way you see fit. So it says, "Hi, Lex. I have a product line that I envision eventually going global, but I'm a little embarrassed to admit I'm having a hard time getting traction for it in my own city. I don't have a problem with talking to people or putting in the work, but I'm finding that people aren't willing to give you a chance if you don't have a big name attached to you already. My question is, how do you go about breaking a new product or service into a market when you're not popular, famous, or well-known as of yet?" So, like, for the purposes of this conversation, we could say it's like a hair product or something like that.
So, I work with energy drinks that are physical product. I've worked with liquor companies that are physical product. I've worked with T-Mobile with a couple of their cell phones. So my thing, when it's a physical product, the same way you can kind of remember going into a grocery store and tasting or sampling food, you can remember going to a liquor store, maybe being offered to sample a sample of a liquor. And you can pretty much remember taking a little brother, a little sister to a Toys R Us or to a Walmart and them seeing an item that was as seen on TV, but when they see it in the store and they're able to touch it, feel it, you know what, now they want it. So if it's a physical product, I definitely recommend allowing consumers to sample, touch, feel, interact with the product demonstrations. Do as many product demonstrations as feasible wherever you see your target demographic is. So if it's a hairline or a hair product, beauty salons. If it's a liquor or a liquor company, liquor stores. If it's a toy, go to schools or go to parks and demonstrate the toy. And the more people are able to see it, the more, and try it, touch it, feel it, smell it, look at it, kiss it, then the more likely you are to increase your sales or at least brand awareness.
Yeah, I agree with that. I think piggybacking off of that is like being open to different types of models, right? Like business models. And that, like for example, a lot of times that people will come into the salon and want to, like just using the hair product example again, like come into the salon and do a product demo or whatnot to consumers, but like there's an opportunity to sell B2B. You're like, you could sell to the hair salon itself, and the hair salon could be carrying the product on their shelves, as opposed to you just selling direct to consumer. And I think a lot of times people go into businesses and they have an idea of like how the model is going to work, but they don't show a lot of flexibility on opening up different lines or different models that you can monetize in the meantime before you get to your ideal model. Or you might find that like B2B might be better for you, and it might be easier and less expensive than the cost of selling direct to consumer. So just, to the person who wrote this, just be flexible in that way, and that like maybe the product is better suited for a different type of consumer or a different business model. So just open yourself up to that and know that, there's tons of different ways to sell products. But you kind of have to play around and kind of get to know which ones are going to work for you, and that just kind of takes some trial and error. And then just selling products or anything can just be hard. Like, everyone kind of has that learning curve and that hump where, you that point before you get your first customer. Sometimes it's off rip, it's immediate for people, but not always. I think for the vast majority of people, it takes a little time. So just, be patient with yourself. Don't let the internet rush you. And know that, once you get the right consumer, you're going to optimize that relationship, and that it'll eventually be successful.
I definitely agree.
Great. Well, Lex, it was great having you today. I think you dropped some great gems. I think our audience is really going to enjoy it. I really appreciate you taking out the time in your day to sit down and talk with me. And I can't wait to share this with our listeners.
No, definitely. If you ever want to reach followers, want to reach me, I'm pretty easy to reach on all social media platforms. LEX Promotions, LEXpromotions.com, Instagram, Twitter, all social media platforms. If you're trying to reach me directly, my Instagram is I am Lex Pierre Lewis.
All right. Well, you guys heard it there. So be sure to follow Lex on both his personal account as well as his business account at Lex Promotions. So thanks again, Lex, and we'll be in touch.
Thanks for listening to MVP. If you'd like to hear more from me or our guests, visit mvpodcast.substack.com for exclusive content, updates, and announcements. And if you love the show, please subscribe, rate, and review us, or follow us at The Amanda Spann at MV Podcast. Thanks again, and see you next week.